Hello class and welcome to this video on the chapter 1 handout 3. Right, so far in handout 1 we went through and we identified some accounts, we worked with the accounting equation. In handout 2 we made some simple statements. So here in handout 3 we're going to kind of wrap them all together until we have one company here. We're given some information about what the previous balance sheet was, what kind of revenues and expenses they had throughout the year. So we're going to make an income statement and a balance sheet for the direction say, prepare a single step income statement and a classified balance sheet for the year ending December 31st. But in order to do this, we also have to make the retained earnings statement to get that updated retained earnings balance. Let's get right into it. Let me share my screen here. Got the handout pulled up here. Because the first thing I like to do when I'm doing this is I would go through and I would mark what kind of an account we had here, what each thing is. So that way, when I start making my statements, I really know what I'm dealing with. Okay. So I look here like accounts payable. Accounts payable, I know, is a current liability. Accounts receivable, current asset. Accumulated depreciation is part of PP&E. Cash, current asset. Common stock is equity. Depreciation expense is an expense. Dividends are kind of a unique thing. They're not revenue or expenses. They're not equity or anything like that either. They get taken out of equity. They're kind of a return of capital, so they really don't have a designation. They only go onto that retained earnings sheet. Limit, we have PPE, income tax expense, we have an expense. Income tax is payable. It's a payable, it's a liability, we'll pay it later. Interest expense is an expense. Interest income. Income, that is considered a revenue. Over here we have interest payable. Again, it's a current liability. Inventory is a current asset. Investments is a non-current asset. It has its own category. Investments. Notes payable due in 7 years. A long-term liability. Prepaid rent for 3 months is a current asset. Rent expense is an expense. Retained earnings. Part of equity. Service revenue. We have revenue. We have revenue, and then we have, I'm sorry, I got distracted, expense, another expense, and then a wages payable, we have another current liability. Right, so now we have them all listed, we can go through and we can start making our statements now. Now we know what we're dealing with. Just kind of looking at this, I haven't looked at this answer yet. Retained earnings, it says comma December 31st. Yeah, I'm assuming that they haven't put it in there yet, because that would just be silly if they did. That income and the dividends, they wouldn't give that to us if we didn't have to make that adjustment. So they're on the whiteboard now. So now that we've identified what we got here, we can go through and start making our statements. That we always make is our income statement. So we start with the name. Lost Airport Auto Service. Then we list the statement that we are making. It is a period statement, so it's 4-year ending. It doesn't always have to be 4-year ending. It could be 4-month ending or quarter ending. Just all the questions we worked out so far, they've been giving us yearly information here. Making a simple or a single step income statement. We start by listing all our revenues. You know, this makes it easier when we have everything listed out here. We can use it in our sheet and see what revenues we have. Then we can mark them out as we use this. So I'm going to start. We have service revenue for parking, which was $232,600. We also had service revenue for repairs, which was $198,500. Okay. Those were our two major revenue categories. We can mark those off our sheet. They've been used now. But we also had one more over here. Since we're doing a single step, we do not have to separate it out. This would go in the other column if we were doing a multi-step income statement, but we're not. So we'll list interest income of $4,100. We can add all those together to get our total revenue of $435,200. Now we can go through and start listing our expenses. You notice we do not have a cost of goods sold here, right? Well, that is because we didn't have any sales. We only did services, so we don't have any cost of the products we bought to resell. You see, that's only going to happen whenever you have a retail business that is selling something that they had previously bought or manufactured. So I'm just going to go down my list here, starting on the left side. And anything that I mark as expense, I'm going to put over here. So first we have depreciation expense. $12,450. Moving on down the line, we have income tax expense. $2,700. We have interest expense. Remember, since we're doing a simple statement here, we do not need to break all of these out into separate categories. That's it for the left side. Moving over to the right side. Looks like we have a rent expense there. That's when I come to. We have our supplies expense for all the supplies we used up. And we have a wages and expense for paying our employees. We can add all those up together. And our total expenses come out to $423,000. Revenues minus expenses gets us $12,200. And our bottom line what we're looking for. And on the income statement, our bottom line is always known as our net income. All right. So hopefully you can do that on your own. You can go through, put all the revenues and all the expenses in there. we came up with that amount. Before we can make a balance sheet though now, which is the second part of our directions. We need to make the statement of retained earnings. So again, at the top, we have Ross, airport, auto service. At this time, we're making a statement of retained earnings, which I'm going to abbreviate RE. And it is a period statement. So we put for year ended December 31st. We start with our beginning retained earnings, which is given on our sheet, $48,200. To that, we need to add in the net income, which we just calculated over here on our first sheet. The net income here, 12,200. Pull that over. We need to take away from that the amount of dividends that were paid out. Just over here. We can do that math, 48,200 plus the 12,200 minus the 6,300 in dividends gets us 54,100 is our ending retained earnings amount. Okay. So now on my handout sheet where it says retained earnings December 31st, 48,200, I'm going to mark that 48,200 out. I'm going to put 54,100 in there. Okay. I can also mark out dividends because they've been used. Now, if you've been marking out your expenses and your revenues and stuff like that, you'll see everything we have left on our sheet now is either an asset, a liability, or an equity. So now we can make our final statement. Service. We're making finally our balance sheet. And remember, instead of saying 40 year ended, this is a snapshot in time. We put the exact date. Okay. We'll start with our assets. Always at the top. What assets is our current assets? Remember, we got to get these in order now because they're not listed here in our correct order. But we have to go in order of liquidity. How fast can they be converted to cash? So let's start looking through our current assets. Cash is our first one. How quickly can cash be converted to cash? Well, it doesn't have to be converted. Next in the order of liquidity would be our accounts receivable. I'm going to abbreviate it like this because we expect people to pay us pretty soon. So we expect these accounts receivable to turn into cash very soon. 39,200. And look through, what else do we have for current assets? We have inventory, prepaid rent, and that looks like that's it for our current assets, right? So inventory would be our next. We sell our inventory, or we use the parts. Okay, That creates our service revenue. It would be the next liquid thing, and it's at 6,100. And finally, our least liquid is the prepaid expenses, because very likely we're not gonna get a refund on something we've already paid. In this case, I'm not gonna call it prepaid expense, it's prepaid rent. Okay, that was the expense that we got paid early. We paid $27,300 in advance. We're gonna add those up to get our total current liabilities. I get that to be $80,300. Now, we move on to our non-current assets. The one we had here, we had some investments. In the long term, so that's a non-current asset. Since there's only one of those, I'm gonna go ahead and put the total all the way out to side here. You really only need to use that inside column when you have more than one that's fitting in there. So for property, plant, and equipment, looks like we have two here. We have our equipment and the accumulated depreciation. So I'm going to list them on the inside. So our equipment is $2,780. From that, we need to subtract out that accumulated depreciation of $42,300. To get our total PP&E, property, plant, and equipment. Be $228,500. Hello there. This is going up, okay. So I don't know when my microphone went out. I went to actually end this meeting and it told me that my microphone was out. I just kind of want to re-explain what happened here when I went back and changed this number in case it was out before then. Okay, I noticed on our sheet it said retained earnings December 31st, but since this gave us dividends and I had not worked this problem out yet, I assumed that we needed to make a retained earnings statement to update that amount. Since we had all the revenues and the expenses and the dividends, we had all the information to update it. But when I went through and updated and used that 54,100 that we got in the retained earnings statement and put it in there, I noticed that my assets did not equal my liabilities plus my equity. So there's a great opportunity there to double check yourself when you see that that's happening. Okay. Put my screen back on here. So like I say in here, right here, this number, I put it in as 54,100 because of what we had done right here. Well, apparently we did not need to do that. Okay, that's how you make the sheet, and that's what you would do. Apparently they had already done the updating, because when I put that number in here, I came up with 349,700, which didn't match my assets. So I just went back and I did some quick math and found out that if I put the number that they gave us in there, assuming that they had updated it, it made me balance out. It made my assets equal my liability plus equity. Okay. So that's where sometimes that accounting equation, it's gonna let you know if you did something wrong when you don't come out balanced. You always have to come out balanced. When you don't, you might have to go back and do a little work and figure out where you went wrong at. And in this case, it was a real easy fix. We just substituted the number they gave in there. Okay, so hopefully you can get through your chapter 1 homework and quiz now, and you'll be all prepared for your exam. Best of luck. Talk to you again soon.